back, listeners, to another week of the Money Mentor podcast. As normal, we have the amazing Doc Wilson back to present again. Lovely to see you again, Doc.
Yeah, great to be here again. And it's our. Let me look at the calendar. Yes, it's our first. It's our first June podcast for the Wilson Weekly, and it's also our first winter market episode. So we've got a lot of good data today, as we always do, of course. But we've got the latest home price report, so hot off the press, and that's for May. We've got all the capital city house and unit results for prices. So some interest there, of course, and market keeps rolling on. No sign of a slowdown, and some interesting results. And when we go through each of the capital cities, we'll see just not just what's happened over the month, but also what's happened this year so far, and what's happened over the past 12 months, and also look to see back 2 years, which I think is important because even though we're in June now, it's been 2 years since we first raised interest rates. And of course, we've had 13 increases in interest rates, and it really hasn't done much to the housing market, particularly over the last 12 months. So we're getting ahead of ourselves here. We need to see the data before we talk about it. But
let's get into it, Doc.
Let's get into it. And as I said, there's some interesting stuff with those latest results. And first with the latest, of course, here at My Housing Market and Infinity. So My Housing Market, of course, is an independent provider of data and commentary. We're all about the current state and future prospects of housing market activity, particularly focusing on current state. We use a wide variety of data insights to come up with our analytics, our analysis of the market. A bit like putting all those jigsaw puzzle pieces together to come up with the right sort of picture. And of course, if you are in the market, or as an investor, owner, occupier, or just interested in what's happening in the marketplace, this is the place to This is the place to be for particularly that focus on the current state of the market, because that gives you a reliable future prospect outlook. So that's enough talking from me. It is the week to Wednesday, June the 5th. As I mentioned, it's the first June 2024 episode of the Wilson Weekly, and it's our first winter market insight. Now, the winter market, of course, has officially started. It's chilly out there, but the housing markets certainly aren't chilly. They're by and large turning over still at quite reasonable results, particularly our auction markets. We look at that at the end today. But the winter market is actually, I don't want to get too confusing here, part of the autumn market, the autumn selling season. And the autumn selling season really works its way through to the end of June, if that makes sense, before we really have a winter shutdown, which occurs in July and into August. So we've still got a bit of heat in the market. Despite it being officially June, it's still the notional autumn selling season. So, and that's what we'll understand more clearly when we look at the auction clearance rates from last weekend. So today we're looking at those May house and unit prices, the latest building approvals from the ABS, which is for April, and of course our latest weekend auction results. So let's have a look at what's happened with home prices over May. So home prices have continued their steady rise this year, except for perhaps that blip that we had over February, which was probably a bit of a seasonal adjustment. It's been a very consistent market in terms of prices growth. We're now heading, when we compare this year to last year, we're now heading into a period where we will be comparing what's happening now with a very strong period in the market, which was last May, June, and July. And of course, that was when markets really started to rebound following what was a quieter 2022. As we've already mentioned, that's when interest rates started to increase. So it won't be as strong, the results, compared to a year ago, but they're still positive for most sellers. So that's good news coming from the latest results. And of course, we've consolidated that growth that we've had so far this year. And we expect that really to continue going forward. But a lot of the pent-up demand, a lot of buyer activity has been satisfied. And of course, higher prices tends to push some buyers out of the market because they sort of can't continue to afford to pay those higher prices. But nonetheless, I also think the fact that we're looking at a steady outlook for interest rates gives us more of a steady outlook for what's happening in the housing market. So we've sort of caught up with the volatility of the last couple of years as a result of firstly COVID lockdowns, then undoing the lockdowns, then the higher interest rates, and then recovering from the higher interest rates. So we're now, fingers crossed, heading to a more settled period of the market where we don't have those factors that have driven that volatility. So enough talking from me. Let's have a look at the numbers. This is the national quarterly. Well, there'll be more talking from me, but not just without some numbers.
Well, I think it's definitely helped with the pause that we've had. Like you said, Doc, we've finally kind of caught up with that initial whack with how high everything went. So
that's right, and it's like the pebble in the pond. The ripples sort of work their way out as the pebbles thrown into the pond, and then they dissipate. But of course, we keep having more pebbles being thrown into the pond. But I think the good thing going forward now is that we have in my opinion, I think will prove to be pretty much on the mark, that a steady outlook for interest rates, despite that, which we discussed last week, that higher inflation number that we had over April, but that is backward looking, and the underlying data has improved since then. But we're not talking about inflation today. We're talking about house prices. So that's the trend we've seen. 14 of the last 15. We've seen a number of rises over the last 12 months in terms of house prices. In fact, we've had 11 rises out of the last 12 months of house prices. We measure house prices, house sales prices on a quarterly basis. So we take 3 months of data, we produce the median as a result of those as insights into that data set, and then we move it forward month by month. So it's 3 months to May versus the 3 months to April versus the 3 months to March, etc., etc. So we're using a robust data set, but it's advancing month by month rather than just taking one quarter and then comparing it to the previous static quarter. And I think that gives us a reliable and a robust measure of housing market activity, house price growth, and it is, of course, very similar to the other providers of house price data going forward. So the national median house price up by 0.3%, just a little bit lower than the April quarter result, which was 0.4%. So similar result, 0.3% over the month for the quarterly data set, national data set. And of course, that's a weighted average, the national house price, because there is no such thing as a national house, of course. So what we do is we take a weighted average based on the volume of activity in each of the capitals. So in a sense, the national house price really reflects what's happening in Sydney, Melbourne and Brisbane, because they are the biggest markets. So up by 0.3%, the national house price, up by 4.3% so far this year. That's a reasonable outcome, I would suggest. That's 5 months into the year, and we are on track at this rate anyway to increase by another 10% this year. Not sure we'll get 10% because, as I said, our growth rates will be affected annually by a very strong market period over the second part of last year. So over the past year, 9.8% increase in the national median house price, so nearly 10%. And over the past 2 years, up by 5.9%. So that's the national result. When we break it down into the various capitals, we had Perth and Canberra as the best performers in house prices over the month, each up by 1.3%. That was followed by Brisbane, again rising up by 0.7%. Darwin up 0.5%. Melbourne and Hobart were flat. Another quieter month for the Melbourne market with steady results. Sydney up by 0.2%. Adelaide, quite interestingly, was marginally down by 0.3%. And Adelaide has been a very strong performer over the past year. It's really been Adelaide, Perth and Brisbane, but just easing a little bit. Adelaide, perhaps some affordability issues coming into play there with that very significant price growth. But one to watch there is the Adelaide market, which just shifted a little sideways over the month, but still good strong results there for Brisbane, 0.7%, and Perth, which continues to lead the charge up by 1.3%, and maybe some early signs there that the Canberra market is finally turning the corner after what's been a pretty
Hmm.
quiet last, particularly since the back end of last year, a quiet period for Canberra houses. When we look at the annual results, or this year so far, again, Perth, the top performer, up by 9.6%. Sydney's still up 3.9% over this year so far. Adelaide 6.2%, despite that 0.3% rise fall over the month. And Brisbane, again, just behind Perth, up by 7.2%. Annual results, again, quite strong in those big three markets. Perth up 23.6%.
That is some jump.
That's a big rise over the past 12 months. And Brisbane, gee, who can hold that Brisbane market back, up by 18.8% over the past year. Sydney, look, still a good result, 9.2%, similar to the national result, a nearly 10% rise over the past year. But when we look at the 2-year period, and that really tells us the story from the previous peak of the market. So it's really telling us, when we look through the changes that came through the downturn in 2022, then the bounce back last year to where we actually are now. And I think that really does position our housing markets in terms of their relative strength, because we go back to the previous, I guess we could say, stable period in the marketplace. So Sydney's only up by 4.2%, well, only over the past 2 years. So I think that's part of what's driving the Sydney market. It's those sort of value opportunities still there, because prices are still round about where they were 2 years ago in Sydney. And I think that value equation is still part of the driving force in Sydney. Melbourne, and this is the interesting one, that's still lower. House prices in Melbourne are still lower than where they were 2 years ago. So there are definitely value opportunities in Melbourne. The Melbourne market is still a little subdued. I think it's a confidence factor more than anything else. Yes, the Victorian economy is underperforming, but the Melbourne unemployment rate is still quite low, at a low 4%. So it's not really a big economic factor. I just think it's confidence. And also in Melbourne, it's the higher priced properties, the sort of prestige markets that have been dragging the chain. There's still plenty of activity in the west, in the outer east, and also in the northeast in Melbourne. So certainly, Melbourne is a market, in my opinion, that's waiting to bounce back. And in terms of its relative position, you can see, particularly compared to Brisbane home prices have risen by 13.7% over the past 2 years. Adelaide up 14.5%. And Perth, over the past year, has seen its median house price increase by 29%. And it's now pushing up towards 900,000. So, of course, Perth is coming from a long way back after a significant period of being in the doldrums at the end of the mining booms back in the noughties and the early 2010s. So it had some way to catch up. It's been catching up, and it continues to do that. But I think it's interesting when we look at the Brisbane market also, it is pushing towards that $1 million median house price. And it's also not that far now behind Melbourne, the Brisbane market. So
No, it's
maybe maybe in the next 12 months, we'll see the Brisbane become the second most expensive capital city for house prices. That will be interesting, wouldn't it? And
a nice prediction there, Doc.
Price over it. Well, I think it's not an outrageous one on the data. And there's no real sign that Brisbane market is slowing down, even with these higher prices. We've got to understand that wages in Brisbane aren't too far away from those in Sydney and Melbourne. So it still has an affordability advantages, as does Perth and Adelaide, with similar wages, particularly Perth, which has the highest wages of the major capitals. It means that buyers there can actually buy more because they pay less, but they have a higher income. So they can go to the bank and they can actually borrow more in that sense, because compared to Sydney and Melbourne, for example, which have higher prices generally to pay for. So that's as clear as mud. But it's also, when we look at the smaller capitals, which are continuing to, by and large, underperform. Hobart median house prices are down by 11% over the past 2 years, down by 1% over the past year. Darwin down 2.7%. That Darwin market's quite volatile, so it can shift from period to period. And the Canberra market, which we've also discussed, may be showing some slight signs of improvement, but no doubt is still got room to grow. So that's what's happening in house prices. By and large, positive results there. Same story there, particularly with Perth and Brisbane. Maybe Adelaide just showing some early signs of peaking, but we're not going to create a narrative based on 1 month's data. Sydney's still growing. Yeah. Maybe it's also just easing a bit. Melbourne continuing to be relatively flat. So let's have a look at unit prices and what happened over the May quarter. So again, similar graphic there for the quarterly series of national unit prices. Unit prices actually outperformed house prices over the May quarter compared to the April quarter. There we can see up by 0.8%, which over a month obviously is quite a strong result. You multiply that by 12, you get nearly a 10% rise. So a good result there. The national unit market, again, it's a weighted average, so it's really reflecting particularly what happens in Sydney, because Sydney is the biggest unit market in the country, and as I said, it's a weighted average, that national result. Up by 3.8% this year so far, so a little bit lower than what's happened with house prices for the national price. And 1 year's result there of the past 12 months, again, a little bit lower, 2% lower than the result for houses, but nonetheless up by 7.4%, the median national house price. So let's have a look. Sydney up by 0.7%, good strong result there for Sydney. Again, that reflects what's happened in the national house price. Up so far this year, 3.2%, and over the past year, Sydney unit price is up 5.5%. Better news in Melbourne there, up by 0.4% over the month, which is what's increased over the year. Brisbane, gee whiz, that unit market in Brisbane is flying, up by another 2.3% over the month. And Adelaide, we've got to understand that when we look at unit market prices in Adelaide and Perth, they're quite small unit markets, those two markets. So there's not a lot of actual transactions that occur, particularly compared to the other larger capitals. So it can be quite volatile from period to period, because it can be dependent on the price profile of the data that comes through. So if you can get a higher volume of higher prices 1 month, and that will tend to elevate the result. But Adelaide up 3.2%, Perth similar to Brisbane up 2.3%. But as I said, I think the big result there is again that Brisbane market, which has a very significant unit market. The Brisbane market, of course, it had a massive building boom over the past decade. There were those predicting there'd be a glut of apartments in Brisbane that were unable to be rented or sold for decades. God, how wrong were they?
Big time.
We're now seeing very strong results there consistently in Brisbane. This year so far, Brisbane unit prices are up by 14%. That's just this year so far. And over the past year, Brisbane unit prices up by 26.2% and up by 32.8% over the past 2 years. So you'd be pretty happy with those numbers if you owned a unit in Brisbane, in terms of those aggregate results. Very, very strong results there for Brisbane.
Do you think it's on the back of, with the wages as well during COVID that have finally kind of pushed through in the Queensland region now too, Doc, like we had in the Sydney, Melbourne days, so before COVID?
Yeah, absolutely. And look, I think, that migration surge has been a catalyst for all of Queensland's markets. It's remarkable that right up the eastern seaboard of Queensland, all the way to Cairns, we've seen very strong results. Queensland's really, the strong market for results consistently in terms of rising prices. And of course, I think the Brisbane market, the unit market, has also had very strong affordability advantages. The Brisbane median unit price is still below Melbourne and well below Sydney. And as I mentioned, those differentials for wages aren't that different from Melbourne and Sydney. So, Brisbane's really developed an inner city lifestyle now. It's very popular, and developers can't get enough stock to continue to feed all that demand for inner city living in Brisbane. And that, of course, is what's pushing up these established unit prices. But as I said, still, at a median of 524,000, still affordable when compared to Melbourne and Sydney. So I think there's still, reasonable upside to that Brisbane market. But those results are quite heady. And Adelaide up 30% over the past 2 years. Perth up 25.6%, which are good results. I won't downplay it, but they are smaller unit markets. And again, similar to houses, Sydney's up just 2.8% over the past 2 years. So still some good value in that Sydney unit market. And Melbourne units are still down 2.7%. So similar results to houses again. So, that Melbourne market, as I said, particularly for units, is waiting to happen. But there's certainly a lot of value in that in Melbourne's housing markets in terms of comparative prices. And I do think to a large degree it's a confidence factor. And also I think the unit market, which is starting to lift in terms of tightening vacancy rates, and no surprise because yields in some of those Melbourne unit suburbs are as high as 8 and 9%, which is very attractive for investors, particularly when we have very, very low vacancy rates. So I think also Victoria will start to take a larger proportion of migration, and I think that will help to continue to boost that unit market. But no doubt, Melbourne has underperformed compared to the other capitals, particularly Brisbane, Adelaide and Perth. And I do think that Melbourne market is an opportunity waiting to happen. But overall, some more positive results for the unit market, particularly in that Brisbane market. And we can say Melbourne and Sydney are quite steady. And good news there for Melbourne with a 4% rise over the month, which has brought it up by that 0.4% rise. Which has brought it up by that margin over the year to date. It's unbelievable almost that Brisbane median unit prices, given higher interest rates and all the other issues, are up by 14% so far this year. Anyway, that's our story for the May house and unit price outcomes. If you want to get a copy of the report, there is a QR code. You can take a picture of that. It will take you to a link to the PDF file for the My Housing Market May house and unit price report. So let's have a look at the other data that came out this week of interest, and that was home building approvals. Of course, a lot of what's happening in our housing markets is because we are undersupplied. It's getting sick of saying this, but it's almost a cliche.
It's a revolving kind of record, isn't it, Doc?
It is. So what do you say? And everybody recognises it. The government recognises it. They're trying to do something about it. Well, good luck with that. And we're not alone. The US is suffering this. The UK, Western Europe, they're all suffering these undersupplied issues, which, in my opinion, is largely come about by, to some degree, the misallocation of government focus, or I guess the wrong focus from governments on a public housing model, rather than trying to nurture the private sector, particularly in Australia, where the private sector obviously builds everything. And we have such a significant private investment sector as well. But anyway, no good news, I'm afraid, with the latest data. Home building was down 1.4%. That followed that 3.7% March rise. Of course, that's the April data. So we're sort of bouncing around a bit, up 1 month, down the next. Units were down 1.1%. So that's an interesting result for units, because they usually rise strongly 1 month and then fall the next month. And that's because we can get a very large development coming through in any given month. And of course, that elevates the data. And of course, the next month we don't get such a large development. Therefore, that pushes the data down. But units were down 1.1%. Houses were down 1.6%. South Australia, interestingly enough, was the top performer over the month, with total homes up by 13.9%. So I guess developers are getting in on what's been a very strong market in Adelaide. So we're seeing more building approvals come through. But when we look at the chart, well, we're not really doing much here. The one interesting thing is, when we look at the chart, we can see it's still sort of bouncing along the bottom. So this is total home building approvals. It's the quarterly trend, so it shows us quarter by quarter, and behind that is the underlying data. But we're actually, even though the trend is flat and has fallen this year, the number that we had over April was actually higher, or our trend over April is actually higher than April last year. So maybe some signs there, very early signs that we're picking up the trend, because we are at least last or over April tracking a little bit higher than where we were over April last year. So let's hang on to that as a good thought, and that we may be
Anything
starting
positive
to.
we can grab for the moment, we'll take it.
That's right, and we'll see next month, But look, as I said, at least we can say that in a positive sense in terms of what's otherwise some pretty negative data, and we can see there over the month, houses, units, and total all down. The year to date, houses have actually improved when we look at the year to April versus the same period last year. Houses are up 3.3%, but units are well down, and it's really units to a large degree that we need, because they provide more of the volume, the higher volume of accommodation. And over the full year, ending April 2024, units are down 14% versus the same period the year before. And we sort of can't put that down to the change from the home builder policy of the previous government, which created a big boom, because that was basically houses, not units. So units are the big problem. And when we look at the capital city results, you can see how far the trend, this is the annual trend of building approvals, down by 38% since that peak way back in 2016. So still down, maybe just starting to flatten off that annual trend. When we break it down into houses and units, this is a horror story, really, because a house is just starting maybe to pick up the annual trend, which is good news. But when we look at units, they're just fallen in a huge hole. The approvals for units on trend, and they're down 56.5% since that 2016 peak. And even though that number's a bit obscured by the chart, it does show 48,000 approvals over the year to April, compared to 110,000 over the year to October 2016. So this is why we have low vacancy rates and higher rents, and high prices, and this ongoing undersupply, chronic undersupply. And really, we're not going to turn this around. Even if we start approving more units, how long is it going to take for those units to become live-in dwellings? Years it takes to turn around an approval into an actual dwelling. But some better news there for houses. As I mentioned, South Australia was the best overall performer. Adelaide was also the best performer for home building approvals over the month. Sydney was down 22.6%, and that reflected to some degree a very big the consolidation, not the consolidation, but the outcome from a very big approval of apartments the previous month. So that's why that dropped away in Sydney. And Melbourne, as usual, is the top performer for home building so far this year. 11,800 homes have been approved in Melbourne so far this year, which is well ahead of any of the capital cities, and the houses are certainly a significant driving force in Melbourne in terms of that big number. Melbourne typically provides 40% of all capital city approvals for homes. So it is the engine room for new home development, and maybe it's providing a better balanced housing market in terms of supply and demand. Maybe that's a factor that's kept that Melbourne market a little bit subdued, but I don't think so. I think it's mainly a confidence factor. But Melbourne's still churning over a lot of approvals for both houses and units. So let's have a look to finish off with our latest weekend auction results. It was the first weekend in June, still part of that notional autumn selling season. We had this trend that's continued all year of higher listings. We've had a surge in properties coming into the auction market. Clearance rates were maybe a little bit lower, but really quite similar overall to the weekend before. But they are lower compared to a year ago, where we were having that revival in the market, which created, with a lot of buyers coming in, which created those high clearance rates and higher prices. I still think we're going to get continuing to get those reasonable results over the next 3 or 4 weeks through the end of the autumn season, through the end of June. But I do think clearance rates are likely to start to moderate as those higher winter auction numbers continue to come through. Anyway, we'll see what happens. So these are the results. Sydney 820 auctions, a rise from the previous weekend. Clearance rates down a little bit, so still a good result there for sellers. You can see the change from a year. Auction numbers well ahead of a year ago, and clearance rates well below, and that's that differential I've discussed. Similar
Mm.
results in Melbourne for listings. Clearance rate was up a little bit in Melbourne, but again lower than a year ago, and listings well above where they were a year ago. Similar result in Brisbane, as we always mention, that Brisbane clearance rate, anything over 50% is fairly normal. It has a different auction culture, Brisbane, compared to Melbourne and Sydney and the others. But nonetheless, still a reasonable result there. But when we look back a year in Brisbane, we can see that very atypical result for Brisbane, just under 72%. Bigger numbers in Adelaide and a higher clearance rate. But the Adelaide clearance rate has been a little lower compared to those 80 and 90% results we used to consistently get in Adelaide. And maybe that's part of the story where we saw that Adelaide median house price just fall a little bit over May. So some early signs there in Adelaide, but still a very good result and the best result of any of the capitals. So let's not quibble about the Adelaide market performance. And Canberra down a little bit again. It's a bit frustrating, Canberra. We get a good result. We think, hey, here comes Canberra. It's coming back. and then the next week down it goes again. And so it was a little bit lower, a little disappointing, or certainly higher listing numbers. But again, when we look to a year ago, that's a clear underperformance. Canberra has really disengaged itself from the Sydney market, which it typically follows. And it is all about houses really in Canberra, although house prices, as we saw in Canberra, were higher over May compared to April. So again, let's see if that can continue going forward. But the unit market in Canberra is still reasonably robust. So this is our track for Sydney. You can see now tracking below where we were a year ago in Sydney, but still good results, all above 70% this year. So that's still a seller's market. Melbourne market has fallen away this year, just trying to pick itself up a bit perhaps, but we need to see some 70% results before we could say the Melbourne market is on the way back. But nonetheless, so far over June, 66% is starting to head towards better results generally for sellers. Brisbane, again, those very strong results a year ago, which were extraordinary for Brisbane. In fact, they were record level results for the Brisbane auction market, now back to more of a normal environment. Adelaide, maybe just starting to fall away a little bit from those crazy results we were getting at the beginning of last year, but still very much a good market if you're selling a property in Adelaide. And as we mentioned with Canberra, just can't quite get off the floor at the moment, that Canberra market. But we're still on watch for Canberra, and let's see what happens over the next few weekends. So as I mentioned, we've seen a flood of auction listings this year, record numbers of auction listings for this time of the year. And when we put that together with the clearance rate, so instead of clearance rates and listings, let's convert it into sales. So these are actual properties sold under the hammer. And we can see that in Sydney, Sydney's sold 28.8% more properties so far this year compared to the same period last year. It's record for this time of the year. Melbourne up 20%, Brisbane up 13%, Adelaide up 11%, Canberra, as we mentioned, dragging the chain compared to the others, down by 4%. So it's been a very big year for auction sales. So still what is quite a strong housing market. And that's reflected, of course, when we look at the prices that are continuing to grow. And despite affordability barriers, they're still finding a way to have higher prices going forward. Of course, you can get those auction clearance rate results on my LinkedIn account, Doc Andrew Wilson at LinkedIn. Every Saturday night around about 6:30, we have the Capital City Snapshot and the full national report Sundays, which includes the regional breakdowns for Melbourne and Sydney, as well as the top 10 auction sales on that Saturday for all the capitals. So look out for those. And that is the latest auction weekend auction market report on that QR code. So you can get your phones out, take a little picture of that, and that'll take you to the link for the latest My Housing Market weekend auction market report. So as we always do, finish up here with the My Housing Market Infinity app. If you want to know what's happening in each of the capital, in each suburb in the whole of the country that has data, right? You can get hold of our Infinity My Housing Market app. Just a heads up, you have to get the password, and the password comes through Infinity. So you've got to get onto Infinity, but this is a great little app. That's the link to it there, and it will give you data on every suburb rental and sales data on every suburb in Australia. Here's a screenshot, which I'll have to update, which gives you an example. So this is for prices. We're looking at state and regions. You can filter it for. We've filtered it for New South Wales, Sydney. We've then filtered it for suburbs. We've filtered it for Blacktown, which is a big Sydney suburb. You can filter it for the type of property, house, unit, or townhouse. So we filter this for house, and you can also filter this for the number of beds. So we're looking at a 5-bedroom house in Blacktown, and what we find out then is it provides us not just with the median house price, but also the current low and the current high, and the number of listings, which you can see there is at 9. We can do exactly the same thing for the rental market. So we've done the same thing there for Blacktown, and that shows you the median rental, the high rental, and the number of properties currently for rent, which is just a 4, which is no surprise given how tight that Sydney rental market is. So finishing up, next week, we're going to look at the May house and unit rents. So what's happening over May in rents, some interesting data there. Also April home loans. We've seen a big revival in investors lending lately. So it'll be interesting to see if April is continuing to show that surge in investor lending activity, which I think is quite interesting in terms of its implication for the market. And also we've seen a falling away of first home buyers. So is that continuing also? No surprise given how tough it is to save a deposit for a first home buyer. You got higher prices, you got higher rents, higher house prices, higher rents, and higher prices for everything. You know, what is it, $7 for a cup of coffee? Well, somewhere it is.
And almost impossible grants to even achieve at the moment too, Doc. So we all know what they do there.
Yeah, so it's a tough gig for first home buyers, but that's what happens when we've got strong housing markets. You know, not everybody's a winner, unfortunately, and you know, particularly with that chronic undersupply, which we've seen today, has continued with that lower building approval data over April's. And of course, we look at the latest weekend auction results. So if you want to get a full copy of this report today, there is the QR code, but of course, you'll see it all on YouTube, which is far more interesting to have a record of that. So that's all from me today. It's always exciting, the data coming through. It was interesting to see what's happening in house prices. And next week, we're going to see what's happened with rents. And we'll likely put that all together to get some return on investment for investors, given this latest data, which, as I said, we've seen an uptick in investor activity with the home lending. Has that continued? And no surprise if it has, because of the strong results we're getting. So that's all from me. My voice has managed to last the whole, what has it been, about 35 minutes?
Yeah, about that, Doc.
It's all good. And I really look forward to seeing everybody again next week.
Yeah, as per usual, Doc, we really appreciate it. And we look forward to next week's episode. As per usual, we'll see you guys next week and enjoy. Thanks, Doc.
Thank you. Happy winter.